Welcome to your Mortgage Insider Update, January the 20th, one day after the Martin Luther King holiday weekend. The president travels to Switzerland for the Davos World Economic Summit and to start the week off. Interest rates are quite a bit higher. After just 10 days ago, we had a great announcement from the president over Fannie Mae and Freddie Mac buying more mortgage-backed securities. That is being offset now with international troubles. So we'll take a look and see what interest rates are doing to start this week off as we kick off what hopes to be a great buying season in mortgage and real estate. Pretty severe increase in interest rates to start this week off as the 10-year Treasury drives higher at 4.28%. We'll take a look specifically around the 10-year Treasury yield, cost of U.S. debt. The U.S. dollar has declined in value against the euro and other nations' currency as some international tiffs began over the U.S. potentially the purchase of Greenland, specifically as the economic summit begins. Mortgage-backed security prices are down, interest rates are higher. We're going to focus again on the 10-year Treasury just as a barometer. So we can see this week that the 10-year Treasury has started off from last Friday, went higher in anticipation of what could have been some international news over the weekend as the U.S. Sends a carrier group into the Mediterranean. In the eyes of Iranian distress and the World Economic Forum, where President Trump will speak today, driving interest rates higher. So basically, we've had a good run of solid interest rates overall being relatively calm the last number of weeks. With this most recent news, we'll hold on tight as interest rates rise. Luckily, mortgage-backed security interest rates to the actual consumer have not gone up as significantly as the 10-year Treasury, but the 10-year Treasury you can see is breaking above both the 200-day average specifically, which bodes not well for the health of the U.S. economy as the international dollar trade starts to unwind against us. We will take a quick look at the mortgage-backed securities. Those prices are lower, so 30 basis points are pretty significant drop in the price to the mortgage-backed security purchases from investors. This has recently seen a boost after President Trump had announced Fannie Mae and Freddie Mac would start to buy more mortgage-backed securities. So not quite as severe of a move. We have not gone down below, say, the 200-day average as far as the price goes, but definitely breaching below the 25-day average. Overall, mortgages have stayed relatively steady in the eyes of the international news. But a move down lower today is not good as we start this week. So we'll start to keep a close eye on that. We'll get Freddie Mac's weekly survey this coming Thursday. Last week, the Thursday summary from Freddie Mac was 6.06% on the average on mortgages. That was after a week of prices being higher, interest rates being lower. So with the price going down this week, we would anticipate that this Thursday, a little bit of a bump up on the 30-year mortgage. Nothing crazy, right in line with where we had been prior to at the end of December, early January, around the 6.1% rate, likely to be seen in this coming report on Thursday. So we're going to keep a close eye on this. We post every week here on YouTube. You can follow us here or take an eye on our weekly newsletter and keep a close eye on what's happening in the mortgage world. Subscribe to us here. Have a great week.